In this video, I walk through the new VolHacks widgets. These widgets are a simplification of Volland data, but are not a substitute for Volland data. These widgets are designed to introduce Volland data and flatten the learning curve. They also provide some useful summations of Volland data for all subs. The first VolHack is the quad screener. This widget shows the dealer bias for direction and volatility for any number of our 1,000 tickers. It uses the current vanna and gamma compared to the ticker's history to determine the bias compared with that history. Please refer to the quad screener video for more details. The second VolHack is the extremes widget. This widget shows area of support and resistance based on aggregate vanna levels at those prices. Short term represents 0 to 2 week extremes. Swing term represents 2 to 6 week extremes, and long term represents 2 to 6 month extreme levels. These levels should not be seen like a technical analysis level. If there is no clear dealer resistance or support from vanna exposure, you will see a +++ in the resistance row or a --- in the support row. If price has entered the extreme area, you will see a --- in the resistance row and a +++ in the support row. In technical analysis, short-term, swing, and long-term extreme levels would be concurrent. That is, short-term would be lower than a swing on a resistance, or swing will be lower than a long-term. That is not the case with Volland. Since Volland is using different vanna extreme levels, short-term extremes can be higher than long-term levels. See here. The way to use these levels is when these extremes reach the minuses in the resistance row or pluses in the support row, it is time to start looking for mean reversion opportunities. If there's no meaningful support or resistance, I would avoid trading in that direction unless you have an idea of what levels that support or resistance would show up. The next VolHack widget is the Catalyst Impact widget. This widget uses gamma and vanna to determine the return to risk of two equal but opposite catalysts at this moment. There are 5 different levels: strong and weak bearish bias, strong and weak bullish bias, and neutral. If there are earnings or another known catalyst coming, it shows the relative imbalance of the price reaction to that catalyst. For instance, if many customers buy calls in anticipation of earnings and customers do not buy a lot of puts, that will have negative vanna and the imbalance will be bearish. However, if that catalyst is bullish, it doesn't mean the stock will go down. It will just go up less than it would have if the catalyst were bearish. This VolHack widget in particular needs context from the exposure charts to identify levels that would need to be passed to change the outlook of the Catalyst Impact widget. The final new VolHack is the Spot Vol Beta widget. The study that garnered the most attention for me on X was my Vol event study, and this VolHack is a gauge showing the deviations between the current and historical spot vol correlation, as well as active vol events. If you want to see the active vol events, you must have the size as medium. When the market drops and IV moves more than historically implied by 2 points or more, as measured by its VIX, it is considered a vol event. When that happens, the market has traded at the previous day's close within 3 weeks over 90% of the time on SPX. The options normally imply a 15 to 25% chance of reaching that price again, which is clearly a lot of edge. Many follow me on X just for this strategy, which is very quantitative and reliable. We released it so that people can get an idea of how effective our data studies are. And as a VolHack subscriber, you can track this study using this widget. Thanks for watching, and may Volland help you in your future trading ventures.